Thanks for joining me today. We had another wonderful day. Today was a great trading day, lots of opportunities. I'm going to be breaking it all down for you. So if you're ready, let's step into the war zone. So first and foremost, why don't you let me know where you're tuning in from tonight? Let me throw your names up on the screen. Shout out to all the Trading Wars Army members holding it together. Adriana in the building, good to see you. Roop, what's going on? Mitchell, what's going on? Luca, Happy Hookers Fishing, what's going on, brother? Fetty, what's going on? Good to see you guys. So I'm gonna hit the replay, and then I'm gonna walk you guys through the plays that I took, everything step by step. Okay. So boom, we go. So we have Evans Adventures in Tampa. What's going on, brother? What I Do, South Carolina. Mark from Ontario. Ape, what's going on? JJ Fish in the building. Phoenix, Arizona. What's going on, brother? Nittany, what's going on? Angie in the building. All right. Raju, what's going on, bro? Handsome Dan in the building. Let's do this. Jason, Los Angeles. All right, let's get into this, guys. Okay. So the first thing that we always do each and every day is we draw the previous day's high and low, and that allows us to understand where we are opening, and where we are opening is going to determine how we want to trade. So the first thing we had was this open that was basically in the dead center of the range. So because we open in the dead center of the range, the first thing that I do is I will not trade an opening range breakout. Okay. So I was not looking for an opening range breakout because generally with these inside opens, when we open up in the middle of the range, we can get a lot of chop. Okay. And you'll see today we actually bounced back and forth with a lot of chop. And then finally in the afternoon, we made a move. So usually what's going on, Bad Indy? What's going on, brother? Roman, what's going on? Normally by the end of the day you're going to have a conclusion, okay? But in the beginning of the morning it's going to be a little bit tough for the Bulls and the Bears to get their footing. Boom. Cootie Aloni, what's going on, brother, with the $10 super sticker? Thank you so much, my brother. I very much appreciate that. Thank you, sir. All right, what's going on, Ernesto? All right, so let's go to the live commentary. Let me walk you through what I did this morning. So me personally here, guys, I took one trade, one short in the morning. It was a winner, and that was it. But there were a lot more trades that I'm going to go through right here. So you could see right here, this is the morning, no opening range breakout. Let's be patient. And then you'll see that we actually ended up going short at 940. So we went short at 940, and I'm going to walk you through. This is a little bit advanced. So I'm going to need you to get the pen and the pad out right now because I don't think you've seen this one before. Okay. Hit me with a 1 when you have both the pen and the pad out. Okay. And put the Hennessy away. Take the Hennessy, put it back on. Tomorrow is Friday. Today is Thursday. So we have focus today. We still have business to take care of. We still got to make money. So put the Hennessy away, get the pen and the pad out, hit me with a 1. I'm going to show you something you haven't seen before. And this is, an advanced style of trading called fading. And I did a morning fade today. Okay. All right. So let's do this now. So the first thing that caught my attention was this area here. Okay. And normally on an inside day, I'm not really concerned about the candlesticks. But what did we have yesterday? What was important yesterday? What did we have, guys? Does anybody remember? We had the FOMC shenanigans. Okay. And what I noticed is these giant wicks. Okay. So this is an FOMC wick. Okay. And you could see we had some selling into the close. Okay. We had some selling into the close. So my thought process right off the bat, why I went short at 940, was that we are still going to have some of this algorithm from yesterday that's going to look again to take a short. So I went ahead here and I drew the Fibonacci from the low to the high. And my basic zone, guys, was from the 618 up here to the 90, all the way up here. This was my whole zone. Okay. And you'll see that we started shorting at 940. So we popped up here on this candle. Okay. As soon as we popped through here, this is where I entered my short. Okay. Literally at 940. And you might be looking at that and you might be like, but the candlesticks look green. Like it looks great. It looks like it's going to the moon. But you have to understand that two things. The first thing is we have an inside open. So I know that there could be some chop. So I know that this could be just a false breakout. And the third thing I know is the FOMC yesterday, that there's probably another bear algo that's still sitting there. Okay. So I went ahead, shorted at 940. So we went short at 940 with a stop at 447.92. And I'll tell you why I did that. So I did 447.92. Let me draw this here. Okay, so this was the stop loss on the short. And the reason why, again, I'm just playing off of these wicks. So we got short right here, guys, and then the stop was here. So next candle comes in. We took a little bit of heat on this trade, almost got stopped out, and then we started turning around. So now this is the part that you probably never seen before. So what I started doing, guys, is I used my knowledge of the morning leg. I took the Fibonacci from the low to the high, and what I did is I used all of these targets, the 50, the 618, and the 786. I used all of these as my targets. And the reason why is because I still understand that the morning leg, the bull can still come and step in on these levels. So I used the Fibonacci in reverse today. Instead of buying, I used it as my targets. Okay, and you'll see right here we go. So 446.80, we hit that target, then we went for 446.20. We hit that, and then I got out on the 618 leg, which was this right here. Okay, so we had that another push there. Boom, boom, boom. Okay, hit me with a 1 if you're following me so far. All right, so while I took this short, Dairy in the small account challenge and also some of the other members in the room, they were going long. So they were taking this Fibonacci to the upside, and that's perfectly fine. So there's always multiple ways to play as long as you're playing good risk reward, as long as you're following the setup. So I did a fade, and then we had some people buy this morning leg, and the morning leg, boom, popped up just like that. Okay, so that's why I did the fade there, and that's why I took the targets. Okay, so you have to make sure that you are following along and paying attention. And then from here, the bull algo stepped in and it made a new high. Do you see that? And this is why, this is the first part of the lesson today. Do not buy at new highs. Do not. Okay, everybody in the room, everybody that's trading with me, they're taking these buys. They're buying the fib, the pullback. You see the red, when the red is coming down, that's where we're buying. And the reason is you have a good risk to reward. It doesn't matter if you're wrong. Here's your stop loss down here. If it breaks and it goes down, okay, you lose a little bit. But if you buy up here and then it comes all the way back down here, then you're going to lose a lot. And this is the biggest mistake that new traders do. And it's just because of the way that we're being taught to trade. You know, we look at spoon and forks and cups and handles and we buy breakouts because that's what people tell us to do. But when you trade actual money, physical money, your hard-earned money, you got to be 2 steps ahead of the game. Okay, when we make a new high, we're selling. We're selling. When we come up here and we make a new high, we sell. We don't buy. We sell. We lock in our profits. Okay? So hit me with a 5 if you follow me there. Okay, and then after we made a new high here, you could see that all the breakout buyers right here, all the greedy breakout buyers got trapped right there, and then bam, 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 bam. There we go. Done. Okay? So that's why you don't buy breakouts. Buy the fibs. Sell the rips, buy the dips. Okay? So from here now, the next leg we had right off the bat was from the high of this outside bar down to this low of this outside bar. We had a perfect Fibonacci, 50%. So this was a 50. So pull back like this, there. Here's your fib. And you'll see that this one actually goes down to the 50 and pops. So this is a perfect synchronized sensual Fibonacci. Okay, where we push down, we pull to the 50, trade to the 50, symmetrical, beautiful, absolutely stunning, gorgeous. Okay, so look, I took this short up here in the morning, but if you missed that, guys, today was brilliant. It was magnificent because after that, you had this 786 buy. Okay, if you missed it all, you had this 50% here, and then you had this 50% extension there, which was absolutely beautiful. Then from there, if we take it again now from this outside bar, we pull it down here. Now we're stepping into the afternoon leg zone, and we have another 50% again. So it was very algorithm based today, extremely algorithm based today. And from there, guys, what happened is we actually had some buyers step in near the close, and this goes back to what I was saying yesterday. If we go back to the daily, remember that I said that we're sitting on the 382 fib, which is a potential place for the bulls to step in. We already saw that they stepped in yesterday. And notice that the bulls couldn't, the bears, they couldn't break this low. They couldn't break yesterday's low. Look at that. Okay. Here's yesterday's low right here. The bulls could not break that. Okay. So the bears, I keep saying the wrong one. The bears could not break that low. So that's showing you that here's your 382. This is your daily 382. Look at it. We came back. We retested the daily again. We put in an inside bar here and then bam, it's gone. Okay. 3 times we tested this level yesterday and then double bottom here today. Okay. And that just shows you that's the power of the daily fib right there. All right. So on the way back up, we had some V triggers on the way back up. You could see we had to pull down and then the push back up. So we had the V trigger right here. So the one to the downside didn't play out well. So let's get the 2 levels out here for the trigger day trades. So these are the automated trades that we do. So you can set these up the night before. So we had 44838. So let me put them both here so we could see 44838 coordinates. And then the other one was 44402. So we go here. 442. And I mean, a lot of you could definitely benefit from just playing these triggers and trading around them because they have a lot of significance. So you could see here, right? So the trigger to the downside, we broke and then we V-triggered it. We tried it again. And this is the 382 from the daily chart is just too strong. So the shorts got stopped out today for sure. But right back on the way back up, you could see the bull was so powerful. We broke through the trigger, hit the targets. Okay. All right. So hit me with a 10 if you followed me there on SPY. Okay. There was SPY. So you could see, right, until we got down to the 382 from the daily chart, we just did leg after leg. This is a leg. Look, I'll show you right now. This is a leg right here. That's a retracement. Okay. This is another one right here. That's a 50 right there. And then we can do this one here from this high to the low here. Here we go, 618. And then you keep going down the ladder. You can do another one here, low to high right there. That's another 618 and so on and so forth. You could even do this one. They're just leg after leg after leg, Fibonacci all the way down. Here's another 786. And, you know, the bear had a lot of chances today to make money. And I shorted earlier, made money, but you can't get married to these trades. You can't be playing for the big picture and for the little picture at the same time. You can't do both. You got to choose which side you want to play the game. Okay. So the bear finally came in and gave up. Bull stepped in big time. And, you know, a lot of times with the bulls, if they have power, it's going vertical. It's going V. This is a full V on the day, V. So we'll call it V bottom. Okay. So there we go. All right, guys. So we are 4 days green in SPY. So in the room with the members here, we've had 4 green days of profit. And tomorrow we're going to try to finish 5 days in a row green. So wish us luck, man. I mean, it's not easy. You have to have a plan. You have to know what you're doing. You have to not overtrade. And you have to be focused on what you want to do. Like I'm shorting here, man. Like, look at this, guys. Honest question. Between me and you, I won't tell anybody. But on these 2 candles, would you be shorting? Hit me with a 1 if you would be shorting off of those 2 green candles. Hit me with the 2 if no. What do you guys think? Honestly, if this was me when I first started trading, I would never be shorting that. I would be chasing that and just buying breakouts 100%. Because that's the way we're taught, guys. Like if you don't know better, if somebody doesn't sit you down and say, look, this is not like, you're not going to make money doing this, then what, how do you know? You know by losing money. Unfortunately, you have to lose money to learn. And that's what I did for many years. When I first started, just lose, get better. And then eventually you're going to have a turning point. I know exactly what I need to happen on the chart. And if it doesn't happen, I just take my stop loss and just leave. That's it. Okay. We also had some great stock trades. Let me go to the list. So I know my brother took some of these stock trades. Actually, let me just pull up the trade plans. So let's see what we had on the list. So we had Chevron, Procter and Gamble, KO. Okay, so let's look at a few of them. So Chevron here, So Chevron was really nice because it actually paid both ways today. So let's look at, so this on Chevron, this is what we call an outside bar. Okay. So that's also, I don't have predictions. I don't predict. I trade what's in front of me at the price, at the open tomorrow. I'll know what I need to do. That's the way that I trade. I don't speculate. Anything can happen overnight. When the price action comes tomorrow morning and I see the open, I'll know what I got to do. Okay. You don't speculate. You're going to lose your money. Do not speculate. Don't guess. Don't gamble. See, trade what's in front of you. Take it one bar at a time, bar by bar, one fib at a time, fib by fib. Don't, if you want to get better at trading, that's what you have to do. The moment you speculate is the moment you lose. Okay. So here we go. So this is what outside bar looks like on the 5-minute chart. Okay. So check this out. You see, we break down and then we come back up. So we break the low and the high of the previous day. So here's your low right here, and then here's your high. So we break both. So let's look at these triggers. So for Chevron, I actually made money on both ways today with this one. I got to check the broker because these were all automated. I didn't even have a chance to really see the total profit, but I know that the short made money. And I believe my brother told me that the long made money too. I have to go and check it after. 164.60 was the short, and the long was 166.74. So let's do that. So these are pretty much very similar to what we do in SPY, but they're a little bit different because these are specific patterns. Okay, but here you go. So check this out. Right, so there we go. So in the morning, we broke the short trigger, okay, and the short trigger went down, hit the targets. And then on the other side, in the evening, we came back all the way. We broke the long trigger and hit the targets. Okay. So hit me with a 9 if that makes sense. So these are triggers. Trigger trading is probably one of the easiest things to do because you just have the line on your chart and you just trade around it. If it breaks it, you go short. If it breaks above it, you go long. You have a trigger to the downside, a trigger to the upside. That's it. Okay, you can keep it really simple. The next one we had was Procter and Gamble. Let's see how that did. Yeah, so Procter and Gamble was a monster. I think I didn't get filled today on Procter and Gamble, which is unlucky. I don't think I did. 156.96. Did we? I'm gonna cry. Look at this, guys. So the order that we had to get long on Procter and Gamble was 156.96. The low was 156.97. That is unfortunate. But this is the reality of trading, guys. If I was a hindsight trader, I would come and tell you, yeah, man, we caught the bottom. But for every 30 or 40 trades, you're going to have one that miss you by a penny or two. Has that ever happened to you? Hit me with a 5 if that's ever happened to you. Hit me with a 5 if that's ever happened to you. That one is 1 penny. And for me, that is probably, that's probably like $1,000 worth of profit there that's gone. That's not gone, just didn't come. So that's about $1,000 worth. So it hurts, but you know, for every 30 or 40 trades, that's going to happen. What do we have next? Coca-Cola in the building. Anybody drink vanilla Coke in here? Anybody remember vanilla Coke? Hit me with a 1 if you drank vanilla Coke before. That was my favorite back in the day. I think reach out to Coke to give us a sponsor. So here we go. So 63.16 was our trigger to the upside here, guys. So we broke it at the open and we basically triple triggered this one. We triple triggered this one. So we went bam, bam, bam. That's a triple trigger. So this one was nice because you had multiple opportunities to get back into this. Or you just held it from the morning, lotto, whatever you want to do. Really nice. What else do we have? Kroger. Is this another sad story? Let's see. 58.96. No, I think we got this one. Yes, beautiful. So 58.96 was the entry for Kroger. This is a great example for a lot of people that ask me like, hey, Rich, what happens when we gap up? What do you do? This is what I do. I leave the entry as is. And then you see some days, not all the days, but some days it'll have a nice retest. You get filled and then we explode. Okay. Hit me with a 3 if you understand that. That's what we call the retest So sometimes if it gaps above your entry, just leave your entry open and basically let it come back. And if it doesn't want to come back, that's fine, because we don't like to chase. Coffee, they got coffee Coke now. It was weird. Yeah, I think I'd be dead if I drank that. Still sell in Australia. Never been. Walmart, last one. Let's see what we have here. 154.93. So I'm gonna tell you guys some interesting things. So when you have a spreadsheet like the one that I have, there are certain systems that you can use, like in Interactive Brokers or different brokers. You can upload a spreadsheet with your entries and it'll automatically put it into your broker. Okay, those are a little bit more advanced, but I just wanted to tell you guys some of the stuff that's available out there. So the long plan was 154.93, and then Walmart came back here 154.93. Very good. Very, very good. Very proud. There we go. All right, guys. I hope you enjoyed the stream today. Tomorrow is going to be Lotto Friday. You know, we have good gains, and I don't want to go and do anything dumb tomorrow. I don't want to do anything stupid. I just want to go ahead and make sure that we end the day profitable. Okay. That's the game plan for tomorrow. So I'm going to take a few trades in the morning, see what we can get. But I'm not going to be greedy because I'm already up 4 days. And if this was me in the past, I would definitely have potentially lost all my gains on a Friday. Hit me with a 1 if you've been there. I've done that before. Have you guys ever done that? Make money Monday to Thursday and then Friday go into Lotto Friday and get crushed? I think the reason is you just get so confident. But the market has beaten me up enough times now that I'm humbled. It takes years to get humbled because everybody thinks they're Albert Einstein, unfortunately. So sometimes the market is going to agree with your setup. Sometimes it's not. And when it's not agreeing with your setup, that's when you have to go to the beach. Always make sure you have the beach ready. Okay. So we'll try to be done by 11:30 for tomorrow. And then call it a day. All right. There we go. Done. Thank you very much for your time, my friends. Check me out at tradingwars.com. Please, if you're interested in trading with us live tomorrow, you can grab any one of these 3 books. I want to take a second and I want to say thank you very much for all of the support on the Golden Partnership with the fibs and the option tradings. Thank you very much, because we've been selling a lot of these books in the last week. I'm very happy about that. So thank you very much for your support, guys. I appreciate you. And I'll try to do more of the live trading streams for free. Like I try to do once a month live trading for free on YouTube. You could check the last one we did. I gave a lot of good winners, a lot of option plays that made good money. So thank you very much for your support. I appreciate you. If you get any one of these 3 books, guys, you get 1 month for free in the room. So, you get the education. You could trade with us live tomorrow. You can sign up here directly on the main page. All right. Please do leave a comment. We will be doing a giveaway on Sunday. So please make sure you leave a comment. You have a chance to win a giveaway, whatever you want to comment about. I very much appreciate you guys. So thank you. I really believe this week was fair. FOMC was a fair day. There was a lot of tradable opportunities in the morning. It was a good week. It was a fair week. So if you're struggling, take a step back and log your trades, evaluate what you're doing right or wrong. And I bet you a lot of the times you're buying breakouts, which can work, but they have to have the right context. Okay. And you need to know when to use them and when to fold them. You know what I'm saying? All right. Thank you very much, my friends. I will see you tomorrow.